Hey guys, it's James with the Chart Guys. It is Tuesday, October 18th. Going to do my nightly review of gold. So I mentioned in my previous video recently that gold has this inside, let me zoom in, inside candlestick that formed last week. So zoom in a little more. The high and the low of this candle is within the range of the high and low of the previous candle. That's an inside candle. Set a break above this high of this candle, 1266.80 would be bullish, and a break below it, 1246.90 would be bearish. We haven't broke above it yet. If we don't break above it, we're essentially looks like it could be forming a bear flag, so something to keep aware of. So by the end of the week, gold bulls need to close above the high of 1266.80. That is a key level we need to close above. On the daily, I mentioned also previously in my videos that gold looked like it was basing and that we'd get an oversold RSI bounce. The RSI was under 30 and it is bouncing, and the reason I noted that is because look, I told you, look in the past at how many times the RSI is this low, here, here, here. You can see the bounces we get. You can get the last time the RSI was actually this low, we got that incredible run after December rate hikes to these highs over here. So be aware that on the weekly we're still setting higher highs and higher lows. High, higher low, high, higher low. So the long-term trend on the weekly is still in favor of the bulls on the daily and the weekly currently. So let's see how much of a bounce we get off this RSI. We're close to a bullish MACD here. We need to get back above this 200 MA, this turquoise MA. After we lost it, we back tested the resistance one time, got rejected, two times, got rejected. Didn't test it there, and we got rejected today. So we'll see if Asian markets tonight can take it above this, back over this 200 MA. See how it falls through tomorrow. On the hourly, looks very promising because you can see we have all MAs as support now, and we are getting this golden cross where the 50 MA is crossing above the 100 MA here. The gold line is basically crossing over the turquoise line. The mint colored line, and it's close to crossing over this turquoise 200 MA. And that is what we call the golden cross, when a shorter period MA crosses over a longer period MA, and the price is above all those MAs. So a lot of it's in the favor of the bulls currently. Now on miners, I was trading JNUG today, and going to share a trade that I saw today. So I always mention the importance of the 20 MA hourly. Let's go to the hourly chart, and how I favor anything with the 20 MA hourly. So you can see a few days back we got the 20 MA hourly as support, had a big day, lost it down, regained the support here yesterday, and you can see it ramped up again. So 20 MA hourly for me is always key on these miners and all these other commodity plays and ETFs. Now after you see the 20 MA, you look at the 20 MA on the hourly, I look at the 20 MA on the 5-minute. So it kind of gives you an exit. So today we opened up, lost the 20 MA 5 minutes. This is the purple line here. So that would have been your exit early on in the morning. And then when it regains the 20 MA here, you can enter again. And you can see that it rode it all the way and held it until pretty much the end. But every time it dropped below the 20 MA, bulls bought it up. And that's another bull sign for the bull miners, because it's been a while since we've had bull miners defend that 20 MA on the 5-minute like that. Lately, when we've lost the 20 MA 5-minute, it's taken big dumps. And you could see the weakness in it continually recently. Whenever it loses, it just has no strength. So that's a big sign for miners that they were able to hold the 5-minute 20 MA all throughout the day. And how we positioned ourselves in the Chart Guys chat room is I alerted the room when I saw this 5-minute chart. Let me zoom in for you guys and explain this. I saw this high volume on this red candle, but I wanted to see how much of this candle was actually bull and bear volume. And what I mean by that is you look at the 1-minute, and you can really tell where that volume actually was. So if you look at the 5-minute, it looks like it's all bear volume. But when you break it down to the 1-minute, and you zoom in here, see this candle? This volume on this candle is green volume. It was bull volume. And so that's very deceptive. That's why I always say utilize all time frames and always watch the volume. And this is where I alerted the room that I was going to take a bottom fishing play, is when I saw this volume spike. Obviously very out of the ordinary, much higher volume than we had all day on the 1 minute. And it was on a green candle. And then look at what happened right after that. Boom. It's crazy follow through here. And then another sign was on the 5 minute. So the 5 minute, see here. So the 5 minute, I saw this potential inverse head and shoulders. So let me draw the neckline here. Oops. Saw this inverse head and shoulders. We could put the neckline. Let's just say we could put it here, just real quick. So anyways, neckline goes somewhere there. So we have the shoulder here, the head, another shoulder, and then we broke through the neckline, and the spike in volume says everything. Whenever you break above the neckline or below the neckline on a regular head and shoulders, you want a volume spike to confirm that it is indeed a head and shoulders. So this is an inverse head and shoulders, which is a bullish formation pattern. And right after we had this volume spike and break the neckline, you can see the upside. So a lot of clues today on why you should have been bullish on the miners today. So we'll see how gold follows through tomorrow. It looks like things are in their favor right now with the hourly chart having all moving averages as support on the gold chart currently. We'll see how it does with the 200 MA on the daily. But yeah, things are looking good for the gold bounce to continue based off the oversold RSI on the daily. So see you guys tomorrow in the chat room. Have a good night.